What is up, everybody? I hope y'all having a great day. If you've been in the mentorship, then we had a great day. But yeah, let's let's get started. So we're gonna speak about liquidity. What is liquidity? And then maybe we'll speak about how to implement that into trading as well. So first of all, let's start with the stop loss. That's gonna be our first thing we're gonna speak about. Let's hop on the 15-minute for that to just get an idea what that would say. So first of all, I'll give you a simple example. Let's say I want to sell right here. What would my stop loss be? Or for example, right here, right? Let me go to replay mode. Right, let's go to a random place. Let's say for example here, what do we have? We want to sell, for example, right here. Our stop loss would be like this, right? And then TP would be like this. So essentially what the market does is the market hunts liquidity very, very much, because the only reason that the market moves is just because of liquidity. And as I've shown, there are three types of liquidity, and we're going to start with the first one, which is the stop losses. And what a stop loss actually does is it forces you in the opposite trade. So first of all, if you are in a buy, if you're in a sell, for example, right here, we're in a sell, let's say, and when your stop loss get hit, you actually, it actually forces you to actually go into buy when you close your sell position. That's when the orders get filled. So what does the market do? The market wants to fill orders, right? The market wants more liquidity in order to push price to its given, like they want to move price, let's say, down, then they want to collect the stop losses above to go down, right? So in order to that, they need to hunt these liquidities. And where do these liquidities lay around? Simple wicks, right? So this is liquidity, and you can mark this like this, type dollar on them. Oh, my bad. Typed on. This is liquidity, right? So if I see a setup like this, I'll first of all wait for this liquidity to get taken, and then we'll see what happens. So let's see. Boom, liquidity gets taken and price moves to my take profit. So this is just a very, very simple idea of how trading works. And as you guys can see, no, this didn't get taken out, but all these liquidities got taken out as well in just one candle, right? Just a 15-minute candle. And now what do you have? We still have liquidity laying around these three highs right now. So it would be very likely for the market to push above these highs now. So essentially what you do is like a trend line liquidity as well, like you're forming liquidity, right? So let's see, the price takes one liquidity right here. So let's mark that out first of all. You can call this a sweep, right? SVP, which is a liquidity sweep. Exactly like that. And then where did the price go? As you guys can see, it filled that order block very nicely, which is also a liquidity term that I'll show in a bit. Now what does price do? It actually, whenever price makes this gets new liquidity, there's also new stop loss of people. And then what is this? It takes that liquidity. Now whenever price comes this close to this, like let's say for example price get us is liquidity, right? But this more liquidity right here, right? And as we know, this is only a 4 pip difference. So I'm 99% sure the price will first go higher and take this high out and then come back down, because this is just a fake reaction to get the early buyers in, right? And let's see what happens next. So essentially we want to see a price take out right here, right? So let's move it like this. So now we have a double top, double liquidity forming, right? Let's get it taken. Simple, in just one candle, and then now we can see price melt down. Very, very nice, very, very nice. As you guys can see, this is just very simple trading. You can actually trade based off liquidity. It's very simple. But yeah, as you've seen, we've predicted everything correctly. Now what do we have? We still have these three stop losses right here, and then you have liquidity filled right here, right? So let's see what price does next. Very, very simple showcase. And this could take a while, which is very, very normal, but that's just the way trading is. We didn't take these lows, so this inducement price won't go higher before taking this low. That's my opinion, right? So let's see. Like it won't go here until it goes here. That's what my ideas is, but it could go, because now we form a double bottom. Like double bottom meaning double liquidity under these stop losses. Yeah, so exactly. What does market do? It forms more liquidity to the upside now, which are these 4 stop losses now. So now I expect price to go collect these stop losses, which we've collected stop losses from here. as you marked these, and now market is pushing as you expect. It's gonna gather all these stop losses exactly, and this just showcases that whenever there's much liquidity to take, so first of all, 1, 2, 3, 4 stop losses, actually 5. Whenever there's 5 stop losses to take, it's very, very likely for price to push this high. And this Wednesday, maybe this would be FOMC, I have no idea, but if you can see, price actually takes liquidity below before going up. So it forces people, whenever they close their position, to do the opposite, meaning that when you close your buy setup, you actually sell because you close your setup in a stop loss, right? In a loss. That means that whenever you're in a buy setup, like let's say for example I'm buying, my stop loss is this. If my stop loss gets triggered, that means a sell gets triggered, right? Because you want to get out of your position. That means you have to sell. And this also means that, you know, price gets more sell volume. And that's also why the reason why short squeezes and long squeezes happen. So I think we've we got down what stop losses are. So let's speak about sell stops now. Let's move a bit into replay mode right here. Let's just take the same stuff so we can actually see that all these 3 stuffs are actually the same, right? So what do we have right here? So first of all, we have people who trade buy stops and sell stops. What are they looking for? Breakout retest, right? So what would they look for? Price to go above here, right? Above these, and then maybe have your stop loss like this. Take profit, let's say anywhere. And what they do is they wait for price to go above a certain high, but they want a little bit higher, right? So a few pips higher, so price doesn't stop hunt them. That's what they think, right? So they have a limit set right here. Whenever price crosses here, it automatically buys for them. And this is probably the dumbest way of trading because it makes no sense, because you're just gambling at this point. So let's see if this setup is gonna hit. Boom, exactly as we expected. And you can have your stop loss as low as you want. It won't hit. Because see, exactly, you can have your stop loss as low as you want. It's not gonna hit, right? Because what is this? This is purely the market faking out the traders, and this is just a false breakout. And whenever you're a breakout trader or a buy stop sell stop trader, that's gonna be an L for you. So you gotta make sure that you ain't making those mistakes, of course. So yeah, that's the buy stop thing. I'll show you a few examples. What is this? Let's say this is our resistance right here, right? This is about resistance, a thing about here. So what do we want? We want price to go above here. So let's say like this, and then we want to buy, right? And then TP, I don't know, anyway here. And this could work, but like maybe one time in 10 trades. So let's see what happens. Let's go a little bit faster. Let's go a little bit faster. Okay, looks like price is coming up now. Okay, so we're about to get tagged in. See that wick? See that wick? That's crazy. You get tagged in, you hit stop loss in literally the same trade. Like it's like it doesn't make any sense. And even if you, let's say for example, you want to get filled here right now, you have a new buy stop. Let's see what happens. You're getting a filled and you're gonna get swept anyway, because that's how the market works. The market works just to sweep your liquidity, to take your stop loss, to take your money, and then go to your direction to make you, first of all, emotionally crazy, and second of all, they need your money. The market does need your money to go a certain direction, because liquidity is what drives the market. Liquidity is fuel for the market. Liquidity is what makes the market go up or down, right? So we can maybe also take this low for an example, or even multiple highs. This is your support, right? This is your resistance. There are times that this could work, but it's very, very unlikely. Like, it's very unlikely to have a profitable strategy or profitable win rate, right? So you would do like this, I don't know, anything like this. So let's see what happens. We didn't get filled right there. Didn't. We're waiting for the breakout, right? And let's see when the breakout comes. So you get filled, right? And there's your stop loss. Boom. Simple as that. And your trade doesn't run even 2R. Your trade does run 2R actually, about 2R, but that's it, right? And let's see if it runs any. Okay, so it does run quite a bit, which is nice to see, right? This just shows that actually every strategy is bound to work. If you had your stop loss above these highs, you would have been fine, of course. these highs, and then you would hit a 2.5, which is not bad, right? But this just shows that it works 1 in the 1 million times. For example, if you had a sell stop here, you would have been swept. If you had a buy stop here, then I don't know about that, but it's the same idea. You get taken out and then price goes higher. So that's what buy stops and sell stops are. So let me drill it down the last time. Sell stop is whenever price goes below support, right? Support, resistance, or whatever, or any low, any market low, protected low, any like internal low. Price goes below support, automatically price sells for you, right? That's what a sell stop is, and then buy stop is the same. So this is the idea about buy stops and sell stop. And then we have order block, which is also a form of liquidity. And if you ask me why is order block form of liquidity, because an order block, the name says itself, it's an order block, meaning there are orders. As you guys can see, this was an order block. Let's say, for example, price bounced. And why did price bounce? Because it gathered liquidity, right? Here were buy limits. These buy limits got filled, meaning that there is liquidity, and see what price does next. This is also why demand zones and supply zones are very, very powerful. We'll see how price comes back to get more orders in before price makes the run. This just shows that, let's see, it comes again, right? And the more it mitigates, the more it gets worse, the less orders there's going to be, but there's still going to be orders. And that's the whole point of order blocks. It's just liquidity, right? Liquidity, liquidity, liquidity. The market needs liquidity. And how can we combine this? Like, let's say, for example, we have this order block, and we're targeting what? We're targeting these liquidities. These are people's stop losses, but it's probably going to take that before you. Exactly. So now you could target this high, right? This is your new stop loss. So let's see what price does. Makes look. This is what I mean. Whenever price comes this close to a stop loss and goes down, it's 100% gonna go up. Maybe 1 in a million that price does not collect that stop loss, but is 100% bound to take that. Right, and now let's see, price goes take these highs as we expected. We're actually here. So yeah, we could see some bullish bearish momentum coming in, but I doubt that because EU has been very, very strong. I expect just bullish continuation at this point. As you guys can see, yeah, it's been bullish continuing for a while. Bitcoin also being bullish, very, very bullish as we spoke. So it's looking very good for them. This is just a video about liquidity, and if you want to implement this into your trading strategy, I could easily show you that. Let me show you that, and just I'll play like 2 to 3 trades, okay? So let's go into replay. Boom, right here, for example. We go in the 1 minute, right? Let's go in the 1 minute, reset chart view. Let's wait for a break of structure, right? On the higher time frame, we are bullish, so we're waiting for a lower time frame continuation model, which is the strategy we use, as you guys know. So this is my demand zone, right? It's about to be rollover, but for example, let's say you got filled here. Where are you aiming, right? This is your stop. Where are you aiming? You're aiming for this. Why? Because there's stop losses here. People who have sold have stop losses here, or even here, right? People who had sold right there, they are still in sells, even though it's been about a whole day, not even a whole day, a few hours. They are still in their sells. So I don't even doubt that price is gonna go that high. Now let's see where price goes. It is about to be rollover, so that's not the best. But sooner or later, price will. Yeah, this doesn't make sense, but sooner or later, this just shows price will take the high. And let's just go a bit further. It's gonna take the high. I'm 100% certain, because price is just gonna go for that liquidity. And yeah, as you go, there you see, 1 to 10 risk to reward just by implementing liquidity into your trading strategy. So let's look for more continuation models. Let's see now. Let's see a break of structure to the upside, and then we'll see some bias coming in. Okay, very, very nicely. Break of structure right there. We want to see a entry from this POI. See if we get that. Now you could have entered the limit. Would have been a L. This could also be your entry. Let's see what price does. I think, yeah, I was about to say I was gonna take this one, right? So let's say we took this one. I actually took this on a live trade. Whenever price took that low, I entered right here, stop right here, and you're just aiming for that liquidity right there. Or you could even aim for some other liquidity. Let's say, for example, right here, right? I doubt it's gonna hit that, but it's at least gonna hit that liquidity, which I know. So let's see what happens. Boom, there's your high. Price could continue going up as well. It just takes a little bit of time, because whenever you're in a continuation buy, you don't want to aim for the previous high. You want to aim for a new high, because that's what a continuation is, right? And this trade could take a while, but you're hitting a 1 to 19, which is a lot, right? So yeah, there it goes, a 1 to 19 trade, live back tested. So you took that one loss and then you hit a 1 to 19, simple as that. So let's see if we can continue with one more buy setup by just targeting liquidity, right? So we have that break of structure very, very nicely, which got caused right here. Let's see if we get that retracement. Not quite. I took that retracement, which is fine. Okay, so we get the break. Now we're looking to buy from here. See if we get the buy setup, or we get that new break of structure. Then we could look for a buy right here. We're just gonna make new POIs, right? Continue with the POIs. So it's forming inducement right now. There's, like, as you guys can see, this is my entry. I see more liquidity being formed, so I'm not taking entry yet before they take that liquidity, right? So let's see. We want to tap in our zone. Looks like we didn't get the tap in. They did take the liquidity though, as we expected. So yeah, there it goes. Nice push to the upside. Let's see if we can get a buy setup right here. Just you know how these setups work. Okay, so now we're in this zone. We could look for a buy here. Stops like this is going to be very, very hard, because you know there's double bottom right here. Maybe have a little bit of room, and then TP. We're going to be looking at the 15-minute chart, and maybe take this as your TP, or even all the way up, which I could hit, but it's gonna take a while, right? That's a 1 to 19 once again, but it's gonna be hard because we're in a bad stop, or we could take a double setup, something like this, and then have your TP like that. Let's see what happens. So if you use a 3-minute manual stop, yeah, you would have been stopped out. So that's -2R, let's say. Well, let's see what happens. Yeah, you see we have the break of structure right now. Let's see if we get that retracement now. Not the retracement I'm looking for, but essentially our bias was correct, which is fine. You lost -2R after winning 19R, so you are very, very fine with that. Of course, after winning 19R, you're not going to be trading, but that's fine. You could take the zone potentially, but just by looking at it, I see too much liquidity and I expect this to get taken, so let's see. Okay, so there's your first stop loss, and then I want the stop loss to get taken. Once this get taken, I could look for a buy. Okay, so it looks like it's gonna come towards this POI where I could buy from. But you also see this, like, there's too much liquidity, right? You see too many liquidity. It's like trend line liquidity, too many stop losses. So let's see. So first of all, I took this stop loss. The reaction is nice though. Let's see what happens next. Okay, so there's a push. So let's say, for example, you could have caught an entry here. Stops would be this, and then TP would be the high. Let's see if that does hit. It's about to be rollover, so I doubt it's gonna hit, but let's see. Let's move to the 15-minute as well. Yeah, purely very, very nice. Plus 14 risk to reward. And if you go to the high, it's probably gonna take that high. So that would be 1 to 36. So let's see. Yeah, exactly. Boom. Full take profit hit. Oh shit, I just saved that. My bad. But yeah, 1 to 36 as you guys seen. So yeah, I hope it makes sense. This was the video about liquidity. Hope you guys enjoyed, and peace.